let's get started with the first conversation today. And on this program, we speak to a lot of financial planners, and these are individuals that give people like you, people tuning in, advice as to how to apportion the money that you earn, how to invest the money that you have in the best possible way so that you can achieve the goals that you set for yourself, be it a retirement corpus, or be it buying a house or a car, or in fact providing for your children. Now, robo-advisory is a different ballgame altogether. It's a similar principle, but I'll let my guest tell you all about it. My guest today is Gaurav Rastogi, founder and chief executive officer of Kuvera. Thank you so much, Gaurav, for taking the time. A pleasure, as always, speaking with you. Let's start with the most basic question for everybody who is not familiar with the term. What is robo-advisory? And I'm guessing you shouldn't be too concerned about a computer handling your money.
First of all, thanks to have me here, Alex. It's a pleasure. I'll start the first question, right? So basically, you go to an advisor. What do they do? They ask you a lot of questions. What do you want to use your money for? What kind of returns are you looking for? Or more importantly, what kind of risk are you willing to take? And kind of they want to create a map of what your future cash flows look like. And based on that, they'll say, okay, this is how much you should invest every month. This is how much you should invest lump sum. This is the asset allocation that you should have. And most advisors, and this has been true for the last, 20, 30 years or more, would use some kind of a template in the back end to give that advice, right? They would have it could be Excel spreadsheets, it could be something even more automated than that, but they would have their models crunch the numbers, and then they would come to you and they would say, okay, you want to buy a car in 5 years, send your kid to an international school in 10 years. This is the kind of cash flow you would need. So you should start investing, say 20,000 rupees every month, 70% in equity, 30% in debt. I'm just making all this up just to kind of give you some color, right? Robo-advisory is simply saying that, hey, you know what, we do the same kind of number crunching. We ask you similar kind of questions, and then we will give you a template on how you should invest. The only difference being that this entire process of gathering data from you, figuring out your risk appetite, figuring out why you need this money for, and then kind of creating a model or a template on how you should be investing will be entirely delivered online. The underlying technology, the underlying financial technology that we're using is no different than what a advisor would use. In fact, it is better than what an advisor would use, and the difference comes mostly because we can process a lot more information, right? So in a way, we are learning from a lot of investors in one go, right? On our platform, we have about 1 million users. There are other platforms with even bigger, higher number of users. We're learning from all of these investors. We're learning investment behavior all the time, and we're deploying it at scale immediately. So we can think of it as an evolution on how advice was historically given and how we believe advice will happen in the future. Now, coming to the second question, should you trust a computer? Now, that's a very different question. It's not the question of the competency of the advisor or the quality of the advice. It's a question purely of trust. And I'll just kind of quickly talk about two terms that I've always spoken about. Whenever a new technology comes in, right, especially one that replaces existing humans and that has a probabilistic outcome, right? So advice has a probabilistic outcome, just because it doesn't matter whether it's an advisor, human advisor, or whether you do it on a goal planner online. Just because someone is saying you invest 20,000 rupees in SIP does not mean or does not guarantee the outcome, right? So it's a probabilistic event. People at first always look at that technology with a little bit of suspicion. So it's called algorithmic aversion, right? It's not something that we kind of adapt to really quickly. But over time, because the technology improves at a scale much faster than what an individual advisor or a group of advisors can grow and learn at, people start trusting it, people start giving it more and more money. And that's when we come to the stage where it's called algorithmic appreciation, where kind of you're actually really happy to have Google Maps on your phone rather than, 20 years ago when it would give you a wrong turn and you would kind of start blaming the technology because it was half baked or it didn't work or it had too many edge cases, right? I believe in robo-advisory, we are somewhere in the middle of that journey. I would think in the next 3 to 5 years, we'll get to a stage where we would be more towards algorithmic appreciation than we are today. So it's a trust is earned by kind of good outcomes. And our belief is that for the entire automated advisory or robo-advisory, that's just around the corner.
Okay, let's talk about this a little bit more. The process that is followed in the advice that is dispensed by a robo-advisor or a robo-advisory platform. The first stage, I would guess, is data collection. And I'm guessing all of this happens online. Is it a very detailed process? How much data would be required in order to provide somebody with usable direction?
So the simplistic answer is not a lot of data. Simplistic answer, and we all would like to believe that we are unique and all the facets of our personality, which we are. But in terms of why we earn money and how we use that money, there are a lot of very strong themes. Like if you look at what are the goals that people plan for, right? I mean, if you look at retirement, if you look at cars, you look at housing, you look at marriage, you look at education, that's like probably 80% of all the goals. You add travel and you add a few of the goals that the millennials are looking at, and you're probably closer to 100% than you would think, right? So mass customization is the right way to look at this. It's only in the edge cases, right? So if you are in truly a unique situation, that is when the amount of data that is required would actually be too large. Now, having said that, one of the things that we always talk about in any kind of data science, and this has got nothing to do with just investing, are garbage in, garbage out, right? So the quality of data is still controlled by the investor. As long as you're giving us good and relevant data, we can do something with it. But if you're just kind of, clicking on boxes and entering random information, what you will get will be a very poor representation of what you should actually be doing with your money.
Right. That's a very fair point. And I think that contextualizes this. One of the factors, and we've spoken about this before, Gaurav, is that you say that algorithms, or in this case, robo-advisory services and investing through this route is superior to the alternative because the robo-advisor or the algorithm makes less mistakes over a long period of time and provides consistency. Is this the biggest strength according to you? It continues to be the case despite what we saw over the last couple of years, the jarring shifts in the market?
Definitely true. So I'll say there are three strengths, right? I'm not saying, it's not like an individual advisor cannot have their own set of strengths, right? In terms of behavioral coaching, they can do certain kind of things in terms of hand-holding that a robo-advisor cannot do. But when you look at automated advice, I would say it comes with three strengths, right? The first strength, like you rightly said, it does not second guess itself. It does not, for example, right, we sent out an email in March of last year telling people to kind of, switch from debt to equity. And right now our asset allocation emails are going out saying that, hey, you know what, equity is done really well, debt has not done that well, switch from equity to debt. In context, over a long period of time, a lot of these small wins add up, right? And that's mostly because we are not going to say, hey, things have changed and suddenly, instead of having a 60-40 allocation, you should now have a 70-30 allocation just because the markets are up. Or just because markets were tumbling in March, the model will not suddenly become conservative and say, oh my God, it can fall even more, right? So that strength definitely stays in principle. The second strength is we learn at scale and we deploy that at scale. And that kind of, it's almost like, it's not like, an individual advisor cannot do that. Once they have advised 1 million people, they would probably be smarter than the computer, but humanly, it's not possible. And that learning that an advisor builds up throughout their career, it's very hard to pass it on to someone else. It goes with them. With robo-advisor, it just, that learning also keeps on compounding and keeps on being dissipated at that same pace, right? The third advantage, and I think the biggest advantage, at least in India, is that whatever we do it in public domain, right? Like, so we are being judged, or the quality of our processes, the quality of our models, the quality of the tools we are providing to our investors, that is being judged by the smartest investor that's on our platform, right? So they are going to catch any and every error, and they're going to tell us, you can improve this, you can improve that. Now, of course, one benefit for us is that it makes our processes, our systems, our tools and models better over time. But the other advantage that it has for the masses who may not be as financially savvy is that they have a really smart group of core users who are watching their back. So a lot of the mis-selling that happens usually happens in private conversations, in offices, on calls, where there is no way for the less sophisticated individual to cross-check whether the quality of advice is good or not. And to me, when I see the level of mis-selling that happens in India, to me, that is one of the biggest strengths that we bring to the table. So net, our view is that if you look at the three strengths that we have, for most individuals, I would say for 99% of individuals, unless you have a very unique circumstance that requires tax laws, or it's about kind of bequeathing your estate and stuff like that, this would be a much better model than a human advisory model.
So one point, and unfortunately we're running out of time on this conversation, and you've made a great case, Gaurav, for robo-advisory services. But the way that I see it is that there's one gap, which is communicating effectively or making somebody understand why they are doing something. And that, I think, is the strength of the traditional model, where you can sit across the table and say, this is why you need to do this. And this may not be the greatest decision for you, considering that you have these many things that could potentially follow. Is that something that needs to be bridged even now?
Oh, definitely. I think we have made a lot of progress in how we nudge our users and how we explain concepts to them. But communication is always something in which machines will always be, or automated processes will always be 2 or 3 steps behind humans. But that doesn't mean that we can't catch up. It's literally a question of that compounding year after year, slowly and slowly, it gets better and better. There is a gap, and I 100% agree to that. I think there's definitely a gap. Our communication, our nudges, our contextual explanations may not be as good as the best advisor, but they're probably as good as an average advisor already, right? So because when you think about human advisors, it's a huge population, right? There are really good advisors, there are really bad advisors, and there's a whole distribution, right? What we want to aim to is to kind of get to where really good advisors are today in terms of how they coach, the behavioral coaching they do, and the contextual explanations they put in place.
Absolutely. It's been an absolute pleasure speaking with you, Gaurav. And I'm sure that people are now more clued in about the services that you offer. And I'm sure that a lot of people who've tuned in are already familiar and are now even more convinced. Thanks as always for taking the time.
Thanks, Alex. Have a good night.
All right. On that note, we are slipping into a short break, but there's more on the other side, so do stay tuned.